Phew. There we are. Good morning, everyone. Hope you're having a fantastic morning yet again. It's Tuesday, lovely Tuesday. We try to get a little bit more into the trading side of things here on our mindset calls. Starting off with some gratitude. I was just saying I had a very long morning with my little man, but still grateful for the lessons that I'm constantly learning. I'm currently reading this book called The Wonder Weeks, where it talks about different phases of baby's growth and development, and how basically there'll be a certain time, roughly at certain intervals, that all babies go through where they're extra fussy and extra needy, and their brains are developing in a certain way that leaves them kind of in awe, as if they're woken up to a new world. And so I think we're just entering one of those phases today. It's a very interesting book. Highly recommend it to all parents, called Wonder Weeks. And it's really helping me sort of grow along with my little man as well. So it's very grateful for finding this book and for having my girlfriend actually found it in German, and she found it for me in English, which was amazing. So it's an incredible book, and it's been really helpful so far, and I'm really grateful for having that. And I'm really grateful for having a thirst and want to read. I never used to be a reader. Mum would always say when I was growing up, you got to read, it's good for you. You'll enjoy it, right? And I was like, I hate reading. I want to be outdoors playing sports and stuff. And as I got older, so probably 28, I started to read I found my kind of niche of books, and now I love it. So I'm really grateful for my mum's persistence and for the ability to grow into newfound passion, something I never thought I'd enjoy, but now enjoy thoroughly. I'm extremely grateful for my Ugg boots today because it's very cold and wet, and we were doing a little bit of maintenance on the balcony, and my feet stayed nice and roasty, toasty warm. So I'm very grateful for my Ugg boots and for my family coming over just a month ago and to my mum for bringing them. So I'm very grateful for her. Always grateful for my mum. So please check in the chats what you're grateful for. Let's share some gratitude. Get your morning starting off right. It's a positive mindset. Actually, I might is this better for sound, anyone? I just realized my mic was on the other side of my desk. Just doing some cleaning. Hopefully that sounds a bit better.
Yep, that's better.
Okay, perfect. Thank you. Yeah, I'm trying to get this sound thing right for the Spotify listeners. I'm still learning how to do all the editing and making it sort of sound reasonable. So if you're listening on Spotify, I apologize. I am learning and hopefully getting better. But hopefully this is a bit better with the mic nice and close. All right, let's have a look at some of this gratitude. Good morning, good morning, good morning, good morning. Very cool. I'll buy it for my niece. Yeah, it's called Wonder Weeks, and it's on my bedside table. I don't have it on my desk, but if you want, I can send you the information for it. I'm grateful for a decent night's sleep. Nice, Aaron. Something that I'm envious of today. I'm grateful that my trading plan is growing my ability to not overtrade. Love it. Yes. Wow, I'm so proud of you, because I know we both had that overtrading habit really quite strong, didn't we? And
yes, we did.
Yeah, and I'm really reducing mine now. Like these last few weeks, I haven't taken any more than 3 trades, and even though like a couple of times they've just been losses, I've stuck to my trading plan, and I'm super proud of myself, and it's huge development. So I'm proud of you, Mike. I'm grateful for working on learning the art of being grateful. Nice, I like that. I'm grateful for the fresh air and amazing winter walk this morning, and for this group and session. I'm grateful for patience and discipline that continues to grow within me, and for acceptance in all things. Yeah, patience and discipline. Oh, that is an incredible skill set to have and to develop, something that I've found myself needing to develop more. I thought I was okay, and then I realized that nope, I need to develop that a lot more, and that discipline and consistency as well that comes along with that can benefit in so many ways. So good on you there. I'm grateful for life. Yes, I'm grateful for each day I get the opportunity to be better than I was the day before. Continual growth, loving it. That's it. We only need to be better than we were yesterday. That's the only person we need to ever compete against. And it's the only person that we ever need to compare against. And it's the only person that we should ever try and be better than if we want to get better. Some days we just simply can't be better than the day we were yesterday, and that's completely fine too. But life isn't about what we see on social media and the attention grab of most influencers and stuff like that, because we never really compare our entire life to that one person. We will compare the best parts of multiple people's lives. So this is quite a big, important topic in mindset that I was listening to just this morning, how social media, while it's so great in so many ways, can be so detrimental in many others, because we're continuously comparing ourselves and continuously trying to have the car that person's got, but the house that person's got, and the dream traveling lifestyle that person's got, rather than, idolizing one person and then finding out what the traumas they live with and what the sad things are they live with and what the struggles they are, and then trying to copy all them. We just don't do that. That's not how it works. So we got to take a step back and give ourselves a break and, just, was I better than I was yesterday? If not, okay, maybe I've got some work to do. If I was, be proud and grateful for that and give yourself a pat on the back. So grateful for a positive outlook and for this wonderful community we have, and it's growing as well, which I like. I'm grateful for my health, my family, and continuing to keep learning. Sorry, one sec. I really like my incense, but some days the draft in here just blows it straight into my face. So I just had to move that because it was choking me out. Grateful for my health, my family, and continuing to keep learning. Grateful for all the support that surrounds me. Yes, support is so key to success, I find. If you've got a good support network, you can get through anything. Great wisdom. Only need to be better than who we were yesterday. Exactly. So good, Christine. Thank you for sharing. Perfect. All right. So
you got a little piece of paper. Oh, sorry. You got a little piece of paper that's in your camera.
Thank you. Sticky notes. Let's move that over.
You're welcome.
Sticky notes all over my computer. So thanks for that. Sometimes they fold in front. Okay. Thanks, Mike. Yeah. So today, I want to delve into a little bit off topic of the why, but also related, and it's more about the fear. So as we know, and if those who have heard me speak before, I talk about how fear and greed, the two emotions that run the charts, right? If you look at the Wall Street cheat sheet, if you look at any of the emotional ebbs and flows that you, what's that other sheet that I was looking at the other day? Can't remember the name of it. Okay, let's just stick to the Wall Street cheat sheet. You'll see that there's the ebbs and flows of emotion and the highs and lows and the euphoria and the greed and the anger that comes in to trading. And this is across all stocks, Forex, crypto, pretty much any bonds, anything that you can think of in relation to global economics runs on fear and greed. Right, now just chuck a 1 in the chat if you've heard of or seen the Wall Street cheat sheet and know what I'm talking about. And if you haven't, chuck a 2 in there just so I can talk more about it if we don't have. Okay, 2. Okay, that's quite a few people. All right, I'm just going to, for those of you that are listening on the podcast at a later date, just Google the Wall Street cheat sheet. I'm going to be sharing this. I'll share my screen with the people who are here so that everyone knows what we're talking about. If you just Google Wall Street cheat sheet, you can all find this. It'll just be an image, probably the first one in Google. Yep, there it is. So basically what this talks about, and you can find this extremely clear in relation to, like, if you look at the 2017 Bitcoin cycle and the peaks and flows, this it almost matches 1-to-1. So for those of you who trade Bitcoin or cryptocurrency, I would recommend just going and comparing these two charts. But what we have here is the Wall Street cheat sheet, which talks about emotion compared to time. Wow, my computer is very much lagging. So we come into the start of a rally and we have a bit of disbelief from the end of the last rally. And then we get a bit of a movement up, which gives us this hope. So we're like, oh, recovery is possible. And this is where lots of good investors should aim to be getting in, sort of getting in at this disbelief zone as we move into the hope. We've got a sign that we're breaking highs. This is where we want to be getting in. But what happens, especially with Bitcoin, and I'm using this because it's great in the media, like most people who hear about Bitcoin have only heard about it 3 or 4 times, and that is when it's peaking, right? So we come in, we have this hope, and then as it rises, we get this optimism, belief. It usually hits the media around here. Then we get into the thrill. Everyone's making lots of money. It's great. Everyone's just gonna buy everything because this is going to the moon. And it picks up a little bit, and everyone's like, yes, we're going to be rich. Tell your neighbors, tell your cats. And then we have this drop, this first sort of spike down, because all the people who invested here are absolutely crushing it. So they're starting to take their profits out here. But most people have gotten in here with this thrill and belief and euphoria, which has pushed this price up to this sort of blow off top. Comes down, sort of resettles. Okay, don't worry. It was just a little bit of a pullback. You know, we're going to be moving back up, and we get into this complacency. We just got to like hold off, wait for this next rally to keep pushing, and then it starts to drop a bit. The people who are getting in here in the thrill and belief, and all those people who just know trading for media and, you know, their neighbor telling them that it's a good idea and don't actually study the charts, are all sort of at break even at this point. And then it starts to go down, gets into anxiety, and then denial, and then panic. And this works on any time frame on anything. So if you've ever been in a trade and you get in and you like miss the boat and it's come up and started to pull back rather than getting out. And I think this actually happened to us yesterday on the charts when we had to push up. It pulled back down here, and rather than exiting, it then did this exact drop. We get denial, panic, and then copulation, and anger. And usually around here, it hits our stop loss, depending on where we got in. And then it gets to depression, like, oh my God, I just had this profit and now I've let it come all the way down, and we're into disbelief, right? So depending on where you are in your trading journey, you'll either be buying in this thrill euphoria and getting into the trap and losing your money and getting into this denial, panic, and capitulation and anger, or you will have learnt the ebbs and flows, and you'll be buying during the fear and selling during the greed. And so you'll be buying in this depression state when everyone's like, oh my God, my stocks are going, I'm losing all this money. And you're like, sweet, perfect time to buy. And then you wait and hold until everyone's telling all their neighbors that Bitcoin's going to the moon and it's on the media, and then you jump out and you've made your profits, and then watch everyone else sort of crumble around you. And unfortunately, those are the emotions that run the charts. And if you were ever trading during when Trump was president, he'd send one tweet out and the charts, especially in US 30, would just plummet. They would just drop, or they would skyrocket, or Elon Musk would tweet about Doge or Bitcoin and then they'd shoot up as well. Like, trading during Trump was as volatile as trading during the news 24/7. Like, all he'd do is send out one stupid tweet and then the charts would react like there's no tomorrow. So why did this happen? Fear, greed, right? Trump would say something and everyone would think the economy is going to do something ridiculous, and so they'd sell out, or everyone would buy in thinking that they're going to make a lot of money, or thinking that they're scared of losing all their money. These are the two main things that drive the charts all the time: fear and greed. And if we understand, and this is why trading's so difficult, because we've got to base every single trade off probability without letting our emotions into trading. However, we have to find probability in the emotions of everyone who is on the chart at that particular time, because there's some form of fear and some form of greed in the market, and we're trying to find a probability of the outcome going in either direction based on the ebbs and flow of the current emotion of the chart. So it's a really hard thing to wrap your head around, and the sooner you can, the trader you're going to be.
That'd be great.
Muting some people here. Sorry, if you wanted to ask a question, that's fine. Just there was a bit of background noise, so just unmute yourself. Yeah, so it's all about the ebbs and flows, and the two main fears, fear and greed, can be seen in any aspect. And what I want to talk to you about is fear. Okay, and the funny thing enough is we are actually only born with two main fears. It is the fear of falling and the fear of loud noises. So if I scared anyone and jumped you back, you still got one of your main fears. Don't worry about that. But we're only born with two main fears, right? We are born as a child with the fear of falling and the fear of loud noises. And everything else that we have, every other fear that we have in our life, is either learnt, is learnt or developed through some kind of shock or trauma or something along those lines. And if in that case, every fear that we have is learnt, every fear that we have can also be unlearnt, right? So I'm just going to stop sharing this. There we go. So every fear that we have can also be unlearned. And so it's really interesting when we look at the charts and we look at our trading style and we look at how we've traded. And this is why an emotional journal is so key. And this is what I'll be bringing out in my emotional journal. Is about, I think there's about 8 key factors like there's lots of things you can improve on in many areas, but there's about 8 or so key factors that you can boil them down to that are the key reasons for why a trade went the wrong way. And that's either through emotion or a couple of other things. So like over trading, you know when you're getting into over trading stages, you know when you're like entering a trade without an entry, like you're like, oh, I'm just going to jump in, or maybe you've not gotten a particular entry candle, but you just have a feeling, or no entry exactly, Leah. So there's a bunch of reasons that, and when you're doing them, like especially when you get a bit further in your trading journey and you understand trading and you start to analyze your trading sessions and see what you did well and what you didn't do well, you start to know when you made the mistakes. You're like, that wasn't an entry. Why did I enter there? Some kind of emotion overtook me and forced me to enter. Or you sit pulling back and you jump in again and you're like, that's not really how we meant to trade. Or you see it, or perhaps you're one of those people who is on the other end and it moves up a tiny bit in profit and you move your stop loss to break even really quickly and then it comes back and takes you out. Or it's up maybe 10 points and you're like, oh, you know what, I'm just going to exit here. And you haven't seen an exit yet. There's no VBC, there's no liquid collapse, there's no signs to exit, but there's been a fear and you've jumped in. So there are 4 main fears in trading. And again, you can Google this. I'm sure there's a few different ways of putting these, but there are 4 main trading fears. You should write these down. So the first is the fear of missing out. And that's a pretty common one. We're always thinking, oh, this move's going to go to the moon. So I want to jump in just because I don't want to miss out and watch the run go for ages and just sitting on the other side, right? You're talking about all my emotions all here. Yeah. Well, this is the thing. All the emotions is what we have in trading. And this is what we need to analyze. And this is why an emotional trading journal is so key, because you will find that there's about 4, or I would say about 8 main reasons, all based on emotion, why we make stupid mistakes or why we make foolish newbie errors or whatever you want to call it. You choose your verbiage. But the 4 main fears here, are the fear of missing out, because like I said, we've all sat there, watched the move go to the moon, and we're like, why did I not jump into that? And so next time we're like, oh, don't want to miss that. I'm going to just jump in and do a no entry just in case, right? The fear of being wrong, and not trying to be sexist, but usually in men, that's much higher because we're stubborn and we're egotistical and we have a hard time admitting that we were wrong or made the wrong decision. Like Teresa is like the queen at just being okay with saying, no, wrong, exit, move on to the next one. There's no attachment. There's no holding on. There's no and this is another thing, holding on to past trades and letting them affect the future is all based on emotion as well. And so if we missed a huge run and we're worried we're going to miss out on the next one, that's holding on to the last trade, which is affecting our current trade. The fear of being wrong is like, oh, I've been wrong a couple of times. Like I'm not going to be wrong again. And you see some traders, and I've spoken to many traders, usually in their late 20s, early 30s, men who go, I've gotten 30 out of 30 trades correct in a row. But I mean, you look at their risk to reward and the profits, and it's not actually that good. And then they take a loss, and they take a loss of like 6% because they're holding on so strongly that it's going to turn around. And so like, even though they may be 30 out of 30, they've had drawdowns of up to 12, 15%. So these things are not really good for longevity. And ego playing a huge part in trading in general. So that fear of being wrong. The next is fear of leaving profits on the table. And this is one for me that is really my kryptonite. Like so many times I will jump in a good trade and it will go down to like and this, I believe this is purely based on greed. And this is why I often say, to my shock, I am still very much dealing with greed, even though I feel like I'm a very generous and giving and caring person. This is probably my kryptonite in trading, and the one thing that I'm working on, and it's the fear of leaving profits on the table. And so many times, like I said, I'll be in a trade, it'll move up, it might get me 20, 30 points. And then I'll be like, okay, but it's going with the trend. It's reached this EMA level or this resistance level. If it breaks over this, there's plenty of room for it to run. And I can get 5, 6, 7%. And I don't want to leave that on the table. So I'll stay in. And then you get a big rejecting candle that pushes all the way back down. And then it like pulls all the way down and you lose most of your profits and it's almost at your stop loss and you're like, oh, okay, well, now it's just doing a pullback. So I'll give it the room to do the pullback so then it can go up and break the high and then continue up. And then it doesn't give the pullback and then it comes down. You go, oh, well, I don't want to, lose money that I've actually made. So you move it up like almost and then it tags you and then you take like 4 out of the 30 points you've got. And then sometimes it does go the other way, break, like you said, and run to your highs, right? It's incredibly frustrating. And I have done it so many times. And this is where I believe so. Okay, so far I'm 3 out of 3. Yeah. So if you're new to trading or, you're hearing this for the first time, don't be surprised that you will be all of these and at different levels. And this is why I believe in emotional journal and tracking this and so not trying to plug my journal, but the way that I'm presenting it, the reason that it helps me is so that once I've done my why I feel what I feel in my trade, I have a keyword section and I write down the one keyword. And then I can look back at my trades and be like, okay, that was like, for example, I have the fear of leaving profits on the table, like 7 out of my 10 trades. I'm like, what could you have done better? Moved your stop loss tighter, taken more profits, fear of leaving, and why? Fear of leaving money on the table. Like I've got that and I can look back and I just got a green highlighter, which just stands out like a sore thumb on my trading journal. And it's the emotion of me having greed in my trades and wanting to take everything that is stopping me from actually progressing forward. And it's really clear and obvious to me. And once you start doing your journaling and writing down the emotions and understanding that there are these key factors and finding those keywords, and those are the things you can work on. Oh, I've thought of that as FOMO, but this is a new perspective. Yeah. So it is kind of the fear of missing out, but it's also the fear of like leaving money on the table. And if you're like, the fear of missing out, I find is more trigger happy, like entering because you don't want to miss a move. But when you're in a move and you're trying to manage the trade properly and you're trying to take maximum profits, rather than just sort of taking out exits and realizing we're approaching our, target area for profit, let's trail our stop loss really closely. And then if it breaks there and then, perfect. If not, pull back, wait, reset up. Who cares? Not the point. This is the trade here. But I think fear of missing out is when you're like, oh, I'm going to get in this because it could. But when you're in the trade and it's like pulling up and coming back down and, you're not really sure, then I think it's the fear of leaving profits on the table. And then the other one is fear of losing profits or turning profits into losses. And this often is based around if you're one of those people who it goes into profit within the first like candle and it's up by like 10 points. And so you're straight to break even I know I've been through all of these phases because I like realize that what I'm doing wrong. And then I try to fix that. And one of the other fears takes over. And then I've managed one of them, but I'm being led by the other one. Okay. 4 out of 4. Don't worry, Lorraine. I have been all 4 of these through my trading career. And I will get to a point where I'm like, okay, so I'm going through leaving profits on the table. And so I'm giving it way too much room. And then it's pulling back and then it's turning into drawdown and I can't exit early and it's hitting my stop loss. Okay, so now I'm going to protect my capital really quickly, which is the key aspect of trading, protecting your capital, right? But then it goes up 10, 15 points or 10 points and you move it to break even right away. And then it comes back down, takes you out and then goes for this nice 50-point run. And you're sitting there going, why does this always happen to me? Right? Chuck some ones in the chat if you've sat there and going, why does this always happen to me? I got some. This is my biggest struggle, finding the balance of protecting capital, but allowing space for the trade to play out. I totally agree. Yes, 111s. Yes, why? Yes, 111. Okay. So just saw that before it shot off this comment too. Was that Amy? Yeah, this is one of the biggest struggles is it's finding that balance between allowing profits and protecting capital. And running a little bit out of time on this, but this is why having a trading plan is key because I believe what we're doing is we're going, okay, so yeah, I'll repeat them just before we finish up to make it not a problem. So I'm going like, okay, I want to protect my capital. Last X amount of trades, I didn't move my stop loss close enough. So this particular time, I'm going to do it. Oh, it's taking me out. Okay. I don't want to get stopped out at break even this time because that's happened to me the last X amount of trades. So this time, because of what happened the last X amount of trades, I'm going to adjust and I'm going to do this instead. And what we're doing here is we're not doing probability trading on the one exact trade based on our trading plan. We are letting previous trades affect our emotions. Therefore, we adjust our trading plan to the scenario, aiming to take as much profit as possible. What we really need to do is make a trade to the rules. Is there an exit? Is it this? Is it that? Yes, no. Doesn't matter what the fuck happened in the past. It doesn't matter how the trade is moving relative to previous trades, but all that matters is what is happening right now, right here, and is it following my plan? Because you might go through a week where your trading plan just doesn't quite click and doesn't quite hit each of the moves, but then you'll have 3 weeks where it does. But if you take 1 week and go, oh, this isn't working, I'm going to adjust it slightly, and then adjust it, then the next week the charts are moving slightly differently, and now that you've adjusted it, that's not working either, and then the next week you've adjusted again, and so you've got 3 weeks in a row where you've slightly adjusted it. You don't actually have a set strategy and trading plan. You've got a slightly different trading plan implemented 3 different weeks on 3 different styles of trading, and you're really fucking yourself over by letting your emotions affect your trading plan, which is then making you rethink whether or not you're a fearful trader, a greedy trader, or a FOMO trader, shall we say. And so we really have to eradicate these emotions from previous trades, stick to our plan, and just stick focused on the one method and let it play out over a long period of time. And let the law of averages show that the trading style that we've got, which we're learning from someone incredibly good at it and has proof, actually does work. So yeah, Amy wrote it out, but I will read them again. So your 4 trading fears are the fear of missing out, the fear of being wrong, the fear of leaving profits on the table, and the fear of losing profits. So having profits turn to losses. Yeah, so those are the 4 main, and you can Google them and find them, and some will have slightly different and some will have different perspectives on them, but that's the same sort of concept. But yeah, I just wanted to really touch base on the fear and greed and the 4 the 4 trading fears that are really, really predominant. And if we can get an understanding of this and let our trading plan be strong through and through, no matter what sort of fear you're letting into your style of trading, no matter what emotion you're letting affect your style of trading, then you can really start to get a bit more robotic, I believe. And again, it's not about stopping you from feeling these fears. It's about learning how to be okay with them, because our body is run by our emotional brain, not our logical brain. We need to let our logic control the emotion. Let the emotion do what it wants to do, but allow our logic to guide it in the right direction that's best for us. Okay, so that's all I'm going to say on this. We are running out of time. Our trading call's just about to start. I'm just going to flick through these last comments. Thank you. Much appreciated. Being grace in, as I am so hard on myself. I really want success in trading. Yeah, being hard on yourself is a huge thing. And I think that also comes down to understanding your why a little bit more. And we can discuss being hard on yourself and just giving yourself a bit of a break a bit later as well. We've discussed that a bit earlier as well, but it is really important. Jake, thank you for discussing this with us. Every day we are getting better, stronger, faster, and your call is making a huge impact for me. I love it. Yes. As long as I can help one person become a successful trader, that's all that matters to me. And we've got 10 people showing up consistently, and it is growing. So hopefully I'll be able to help more and more as we grow. Thank you, everyone. Thank you, thank you, thank you. This topic today was really, really great. Thank you as always. Thank you, thank you, thank you. All right, everybody. I'm going to bounce pretty quickly because I have gone a little bit over our time. To my traders, I will see you on the call right now. To everyone else, we'll see you tomorrow. For now, I will love you and leave you. And for those who have messaged me in regards to going through their why, I would, maybe have a think about what you think your why is, and then we can go through the 7 levels deep tomorrow. And I think we got 2 people that definitely said yes. If anyone else is keen and interested, like I said, send me a message. I would like to go through as many as we can to really let people see how it works and really help as many people find their why to a deeper level. But for now, love you all. Thank you. And we'll see you tomorrow, if not in our trading call. Bye.
Thank you, Jake. Bye-bye.